Before we get into the episode, a quick reminder that the last trade is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Now for a word from Onramp. Onramp is a Bitcoin asset management platform built on multi-institution custody. We serve high net worth individuals, institutional investors, and financial intermediaries with a best-in-class suite of products, which include multi-institution custody, a spot Bitcoin fund, Onramp Wealth for RIAs, and private wealth services for high net worth individuals. Leveraging our partnership with BitGo and other industry leaders, Onramp's multi-institution custody is a first-of-its-kind institutional-grade vault, requiring 2 of 3 institutions at any point in time to sign once a client's unique permissions have been met. Our multi-institution vaults utilize cold storage, key signing, and authentication at the direction of the client to maximize security for client assets. This pioneering approach to custody is the foundation of Onramp's financial products, which reduce counterparty risk associated with trusting a single institution. To learn more about how Onramp can help you secure a new or existing Bitcoin position, please visit our website at onrampbitcoin.com, where you can schedule a consultation and connect directly with our team.
What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. I say when we sell.
And we're live, gentlemen. Back for another week of The Last Trade. This week joined by Mark Connors, the Director of Research at 3IQ. Mark, welcome to the show.
Thank you. Thanks for having us here. It's a good foursome.
Yeah, we were just saying we're all pros. So it's good to have a bunch of pros in the room discussing Bitcoin.
There's no one else here to refute it, which I like that.
I guess before we jump into an intro, are you comfortable riffing on what we were discussing before we hit record on the ESG narrative? What you're seeing there?
Yes, yeah, sure. So we were just talking about what I was doing, and I've been aggregating information on the ESG, and the whole idea is that Bitcoin in general is complex and moving fast, and most people are still looking at 2017 news stories or even the technology. They're not really catching up to what it's doing now. And a perfect example is how Bitcoin mining is now even being recognized by the UN for helping solve global warming, just to start with a big old nugget punch right there. And then what I was talking about was, is it Dan Batten, I think is the, in CH4, he runs a fund. I think he's an Australian or New Zealander. And he's been migrating into the Bitcoin space because he is a environmentally oriented investor. And the whole idea about Bitcoin mining is really the only option to help reduce methane flaring, and how that has not only attracted ideas and people in the space, but investors. And I think you were just talking about how your firm was bought out by an energy company that is engaged in that exact process. Is that right?
Yes, Croesus. It's funny, Cully from Croesus, their CEO, was on 60 Minutes this week telling the story. I'm not sure if you saw that clip.
No, I didn't. Wow.
Yeah, it was one of the few bright spots in mainstream media coverage of Bitcoin mining. And I mean, the flare gas mitigation is probably one of the most ironclad narratives the mining industry has. It's a very visible problem, quite literally, with the flame in the air, and the fact that you can reduce that to nothing and get value out of it it's really hard to say that is not a net benefit to humanity at the end of the day.
And isn't there a case, I don't have the raw data, but I've read recently that methane flaring got a bit of a pass by the either environmental, but I don't know if it's a carbon emissions group or you have to buy offset. So they don't have to offset it as much for carbon emissions for flaring. Flaring gets a pass. But if it's used for Bitcoin mining, it actually becomes a cost. In other words, they don't account for the mitigation it provides, but actually again, Bitcoin's so far ahead of the curve that the regulators and the taxing authorities don't know how to deal with certain aspects of it. So if you weren't aware of that, we can maybe put that in the notes after. I'll follow up on it. Yeah,
it's different depending on the jurisdiction. Up in Canada, you can't flare at all. They're not allowed to flare at all in Canada. That's why Upstream Data has had a lot of success up in Canada. They're selling their hash huts because the producers can't flare at all. And so if they're doing extraction of oil and gas, the associated gas needs to be taken care of. Bitcoin mining is a perfect example. In the Bakken, if I recall correctly, it's been a couple of years since I was deeply involved with our operations at Great American Mining, but they have, I believe, like a 90-day flaring post initial drill. So you can drill and flare for 90 days, and after that, you have to figure out mitigation. You start getting fined by the EPA. New Mexico has very strict flaring laws. Down here in Texas, they're a bit more liberal with it. But yeah, there's inter-jurisdictional differences between how much you can flare, how long you can flare, and whether or not you can flare at all.
Yeah, I think the whole capital stack starts to change. I've been further removed from it, but I remember in 21 and 22 in Texas specifically, when it came to mining on land, and when you think the capital structure, if you have the landowner, you have the leaseholder, and then somebody that's going to leverage the natural resources, and there's a certain threshold of that's due. But then that starts to change with the economics of the price going up, and those leases started. I think Marty's talked about this. Those leases started they have certain standards built in, and now people are going back to rewrite them because you got to account for this asset that can just reflexively go up at such a fast pace compared to what you've seen in oil and gas historically.
Yeah, what you're touching on there is the mineral rights owners and how the leases are written for them. So somebody owns the land, owns minerals beneath the land, they lease that out to an extractor, and typically they get their royalties at midstream. So when that gas goes to midstream and then sold to the broader market, they get typically, I believe, 12.5% of the revenue in royalties on those sales. And that's where Bitcoin mining is throwing a bit of a wrench in that setup, because you do the extraction and the monetization of that gas upstream and not at the midstream. And so, like you said, Michael, people are beginning to rewrite their leases to ensure that they're getting their royalties from the monetization upstream.
Mm-hmm. But Mark, before we jump into the episode and your background, I was thinking, I know for Marty and myself, and I think majority on the pod of, you mentioned global warming and Bitcoin solving it, that there's this sweet irony in a lot of these tropes that have happened. And that it made me think of when you're a child or younger and you're told not to lie. And the reason you're told not to lie, there's lots of reasons, but ones that always comes back. You cannot run from the lie long enough. And there's all these common things that are said, and you just get trapped in your own kind of propaganda eventually. And it's wait, this is the thing that it was supposed to boil the oceans and end everything. And this is actually the thing solving what I'm going. And now you're just stuck in a pretzel, wondering what the hell am I talking about?
Yeah, it's almost too big a nugget to present. That's why I almost walked it down after I said, all right, let's just go into the details first before we throw out that little reversal of narrative that people are not going to be ready to almost take in. It's almost like you want to sort of do incrementalism, just talk a little bit at a time, because you're right. Yeah, and I don't know how much was a lie, or was it just self-serving or fear or misunderstanding. It's just a bunch of, to look at incentive structures about why the WEF or others would say it, other than maybe they don't control it. It's the only thing I can think of.
Yeah, they don't like that they can't control it. It's scary. Brave new world.
Brave new world. Sometimes you can't control everything. Become a parent. Find that out soon.
Found that out last night. I was telling Jesse and Michael before you hopped on. We had a midnight trip to urgent care for an asthma attack last night. Can't control that.
Nope.
Can't control that.
Nope.
But I guess diving in, we dove straight into Bitcoin mining, flare mitigation, all that good stuff. But let's take a step back and allow you to introduce yourself, Mark, what you've been doing. I think your background is extremely fascinating, particularly coming from Credit Suisse to 3IQ to focus on research and advice on how to allocate to Bitcoin.
Yeah, I feel a little bit like Will Ferrell in Old School, where he says, we're going to streak the squad, or the quad, come on, follow me. Like no one from TradFi following me. I'm like, come on, guys, the water's warm. Let's go. And there are some. I got Pete Janney over at NYDIG, and a few others. But when I go back to meetings, we have holiday parties, they kind of look at me with like a little bit of a, we still like you. We're not going to call the authorities or have you in a straitjacket. It's okay. We still like you. So I mentioned that because, I've spent 30 years in, firms from, Dean Witter to Smith Barney. I was at some smaller firms like CRT Capital that focus on distressed debt, which that process actually is most applicable to this investment thesis, I think. We can touch on that later. And then in the hedge fund community for about 15 years, doing risk management across multi-asset, and then Credit Suisse. And the reason why I came over is we would help, our team helped hedge funds with alternative data, whether it be positioning data and the like, and then we would compare it to the market data and say, here comes another market shock. Be careful, it looks like positioning will change and you guys should, deleverage. So we were communicating to, the major funds and their PMs, et cetera. But I noticed that a lot of them were going out of business. And these were smart people, a lot of resources, and they couldn't beat the S&P or the NASDAQ, even on a risk-adjusted basis. Only the larger ones like Citadel, Millennium, Bally's done a good job, for the past 5 years, changing their process. And I wondered why. And then I'm like, oh my God, the Fed is becoming more centralized and they're becoming the volatility extinguishers. And they're coming in with QE like they did in, August of 19, and obviously in 2020. But the debt load was getting so big and the number of buyers of our debt so small. There used to be like 45 primary dealers managing the distribution of our auctions. Now there are 24, 25. They used to be all U.S. The Fed only dealt with U.S. entities. And now only a third of them are U.S. We had to spread it out because it became so big. So we have fewer people managing our debt load. We have more of it. And now the Fed's a buyer of last resort to its own auctions, essentially. So I saw it from a macro standpoint. And the effect was that these tremendously resourced hedge funds couldn't beat the Fed because things changed so quickly from a macro standpoint that you just had to as I say, don't fight the Fed. But we'll go into how that's going to turn sideways. And then over a period of 2 years, I started to understand Bitcoin a little more. And I'm like, And it's funny, I just didn't think until now. I literally had the visual of people leaving treasuries and equities and stepping onto Bitcoin. So maybe, I don't know if that's how you got the name Onramp there, folks, but that is literally, I said, maybe we don't have to go through a default, that there can be a new asset, kind of like when Nixon broke the peg in 71 and Citibank was bleeding losses in emerging markets, but they developed a brand new market that never existed, which was foreign exchange, and it saved their ass. So maybe this is that new sort of punch to the new realm of opportunity, I believe so, where, the burning fire behind you, you escape by stepping onto Bitcoin. So that's how I came here. That's my background. So it's global macro, it's markets, and now it's including digital assets. I mean, Bitcoin really as the main animal.
That's so interesting. That's fascinating to hear your journey there, and that that's exactly how I view it too. We talk about it as like the lifeboat, Bitcoin's the lifeboat for what's coming, this storm of sovereign debt, and what the hell is going to happen here. And I share that hope of, I think that this is what, without Bitcoin, I think there's a much greater chance of like global catastrophe, in terms of Great Depression level upheaval as the sovereign debt situation plays out. But with Bitcoin, it could be that smooth lifeboat for us to transition to, and the lifeboat builds and gets bigger and stronger over time, and turns into the new boat. So I'm hoping that that's how it goes. Mark, if we still have you there,
Jesse, why don't you just rehash the last 10 seconds of your question there?
All right, we're going back, Mark.
Thanks, guys.
Yeah, Mark, I don't know how much of you caught it. I'll just roll into it here. It's fascinating to hear about your, suddenly becoming aware of Bitcoin's actual value proposition. And I was just curious, what were the pieces that you read about Bitcoin? Because if my timing is right there, Paul Tudor Jones would have been right around then coming out, with his Bitcoin's going to be the fastest horse this decade, his May 2020 BVI letter. And there were a few other, Bill Miller and Stan Druckenmiller were starting to make comments around then. Is that right? Or am I totally off in my timing there?
Yep, that was it. And then it was a friend who I was speaking to who said, yeah, you're just supposed to own a little. I mean, that's how early I was. And so I bought a little, and then I started reading. So I was at sort of live, take action and then read, small amount. And one book I read, which I really like, because I like getting the context, was Digital Gold. I don't know if you guys have heard of that.
Yeah, I read it quite a while ago, and my recollection of it is that he recognizes that cryptocurrencies are digital gold, right? Okay, but is it specifically focused on Bitcoin? I might actually be misremembering which one this is.
It is mostly on Bitcoin because it finishes in 2015. And what I liked about it is I love stuff frozen in time. Is what did they say back then? That's why following the Economist articles over 10 years, and as I said, it's going to die 1,000 times, and they were wrong. What I liked about Digital Gold is it gave you a narrative, and Popper doesn't even like Bitcoin. I think he's not a fan.
Yeah.
Nope. Wasn't allowed to buy.
But yeah, I don't think he owns much. But it gave me the background. I understood it. It was from obviously a disinterested or an unbiased party, because he's not a fan. And everything that, is a guy, the Argentinian Wences, I think the guy who had the...
Cesaris.
Yeah, Cesaris Wences, or Wences Cesaris, I forget how it goes.
The latter.
And everything that they're talking about has happened. So I love the historical perspective. It wasn't the tech that got me. That came later on the understanding. I had to get the concept down, and then the tech later. So that was helpful for me. I had to read about it, and then I went in deeper.
Yeah. So I definitely did read that book, but that was the beginning of my altcoin arc. So whatever it was about that book, it didn't prevent me from taking that idea of okay, these things are digital gold, and then saying there can be an infinite number of them. So I guess it was or maybe I just missed that part, and I needed to learn the hard way.
Mark, going back, I'm curious if you can share, and it's probably pretty, there's a lot of info there, so you can, give us the short version or a longer version, but you referenced Forex being this valve and supporting from a crisis previously. Can you talk about where you see, or how you see mechanically and structurally Bitcoin being able to support in this kind of easing or transition to a different monetary base? Sure.
So when Nixon broke the peg, which is crazy, right? I mean, the fact that, after World War II, 43 countries agreed to put all their gold on ships and bring it over during the war down below Maiden Lane and then out to Fort Knox is kind of bananas. But that meant that obviously we could rebuild faster, and that the global growth helped a lot. And it actually was beneficial because then we could chew through all our debt, inflate it away in a very efficient global coordination. So there was a purpose behind it, and that held true. When Nixon broke that, trade went crazy. So then everyone's own currency started to float against the dollar, not against gold. So then in order to do trade, you had to then get a relationship, had someone foster an exchange between A and B. And I guess the reason it's relevant to today is that, as we know, with Russia invading Ukraine, what's happening in the Middle East, there are disruptions to trade. When trade gets disrupted, growth goes down and people get hurt. Just obviously, as GDP declines, death rates go up. So what happened with the FX is that people found a way to foster trade. And that's what I think Bitcoin's doing. It's being faster settlements. It's serving a need that slower money and less integral money is bringing to us. So it's not a direct analogy, but technology has always provided a solution, and Bitcoin was there. FX was the technology that the banks, this time it's not going to involve the banks as much. So that's one takeaway.
No, that makes sense. There's a monetary base with integrity, basically, that we all agree on. And so it's the intermediary between other currencies that are facilitating trade or economic activity and that we agree on.
Yeah.
Yeah.
And this is a fascinating framing I've never heard typically when Bitcoiners talk about Nixon ripping us off the gold standard. Bitcoin's the solution to the problem that started. But I've never heard like the parallel sort of narrative of, it's going to do something similar to what happened after we got ripped off the gold standard. It is pretty unique perspective. It does paint a picture of optimism moving forward.
Yeah,
more.
and that's it, because part of our narrative is that there's a problem, and no one really wants to hear about, the debt problem, and Lavish brings it up about the spiral, and he's not wrong. It could take longer, and it is there. We've jumped the shark. But you don't have to focus on it. And I agree that we have too much FUD out there. I got kids. And, this whole negative narrative garbage is just creating a real mental health problem with kids in general. Just makes for a bad mood on weekends. So I think, and we know that social media gets that without getting too far afield. Just because mainstream has not adopted it doesn't mean people shouldn't get curious on their own. And that's basically what I think. What I like work with you guys is not everyone in our industry, is sort of, as we found out, trustworthy or worth listening to. So I'm trying to, be not too far afield, have a sound argument or presentation to get people to just take a look. Because I agree. I think it's way constructive, but part of it was, as you saw from my publication last week, Jesse, I went front and center with your asset pile. I mean, that's just clear as, rain, just wonderful.
Thank you. Yeah, it really is. When we had some technical difficulties here, I was beginning to talk about how, it's the lifeboat analogy. But it's a funny sort of lifeboat analogy because Bitcoin continues to grow and develop, and as the adoption curve progresses, more and more people fit in the lifeboat, but the lifeboat grows with it, and to a point where it can grow into the ship itself, right? So we sort of have this ailing current system, and this wonderful lifeboat that creates an opportunity for constructive growth and development and solution to many of the problems that we are facing with the traditional system at the moment, such that it really is the only thing that's giving me optimism at this point in time about how things can play out fiscally, economically into the future, because that debt spiral, is very scary if you don't have a way out. And as a millennial, without Bitcoin, I would not have any optimism about ever being able to retire, for example. But with Bitcoin, I have that optimism because it creates this tailwind for my finances. And it allows me to plan for the future in a way that my peers are not. I'm focused on building a family right now, and most of my friends are not. And I think that that's just as an outcome way downstream of having Bitcoin as my store of value currency versus the dollar. And so, there's probably a better way to encapsulate that hope, that optimism, that relief that the Bitcoin lifeboat allows for and represents. But it's unmistakable that it has the ability to make a better future for us as individuals and collectively at a time when the math is starting to look a little scary with the current ship starting to list a little in the water and taking on, a little too much seawater.
Yeah.
Yeah, I think what Jesse was alluding to is like there's two parts of Bitcoin in the sense of like you have the monetary preservation of wealth that obviously matters, but then there's also this lens that you start to get on the world. And I'm sure you've seen, Mark, we discuss of like when you see that there's there's these two parts, and it comes up more and more, and you referenced it about pessimism, depression, all the stats that we know that are happening in the US and like globally. And it's one thing to like not know what the problem is, because that's already disconcerting and like disorienting. But then even if you know what the problem is, then not having the solution is the second kind of like part of like where you just don't have the hope. And so being able to have both of those from like the Darwinistic kind of like preservation of wealth and being able to build and have children, all those things are relevant. But then it's also starting to see the world for what it is and the problems, and then you can actually diagnose. But then the other part where you're referencing, Mark, is like on, this stuff's happening and being used now today. And so you made this reference point about Forex and how we can see this kind of like transition. And we've talked about it on previous podcasts on this like oscillation that we think we'll see over the next decade between like gold, Bitcoin, and then whatever the, digital currency is, whether it's a dollar, CBDC, or alternative, other countries' currency. But there's all these other, and that's already kind of happening now when you have all these cryptocurrencies and this different trade. We see what happens with Forex or like remittances with Bitcoin. So you can kind of squint and already see the market structure happening and the utility that's being provided. It's goes without saying, it's at a very micro scale, but it's to your point that like these concepts have been delivered for years now by people that came way before us, and they're playing out. And so we're kind of right in the thick of it, in the middle, whether it's how we custody and these other things that we're talking about or doing, these primitives we're building in the financial structure that you can kind of squint and see larger and larger cross-country, cross commodity bases on how you settle with Bitcoin.
Yep, it is there. And I still think the Bitcoin UI, which is what you guys are trying to solve for, is terrible. There's this,
yeah.
I mean, relative to how easy Web 2 makes things. And, there's this story about AOL back in the day that is early. And Steve Case is saying, we have a problem. Why isn't this happening? Why aren't we getting adoption? And this engineer, actually relevant nothing, but she said, she picked up the phone and said, until we get a dial tone on demand, we will not have full-scale adoption. I think it took 18 months, and it involved connectivity. It involved getting more, coax as opposed to dial-up. So, we have the throughput. We just don't, I think, have a great UI, which is why you need trusted partners in the beginning, and that's why it's going to be, we are a regulatory wrapper, and through ETFs and funds, you guys do the custodial work. And as we said in the other call, we support, sovereign holdings, but without going down that one, we need to be a better UI. That's why Bitcoin is only trading at a $780 billion market cap and not, 20 or 100 trillion right now. So that's, it makes sense to me that it'll happen, but no one's thinking about why they need it until they see it.
Right. I like to talk about how there's two parts to the digital revolution. There's the digitization of information, and there's the digitization of value. And we've lived through the former. That's the internet. And the internet was started in the 70s. I think it was 79, like the first really true internet. And so your AOL moment is 15 years into that. And we don't think about it that way retrospectively. We think about the internet as starting in the 90s, but that's not true. It was already 15 years in the making before AOL came along. And that's really that hockey stick in the global adoption point that everyone remembers. And so, where are we right now? We're 15 years into Bitcoin. And what was the first 15 years for the internet? It was like super clunky, super technical, very hard to find information. You needed to be very technical to understand what the hell to do. And you were troubleshooting a lot of it your own. And eventually those sticking points were obfuscated away, abstracted away as we got better and better UI, and therefore the UX improved to a point where eventually you don't even have to click anything to log on to connect to the internet. You just literally pick up your phone. But that's way further down the road. But in the early 90s, you were dealing with you had your own dial-up internet, and you had to be running some code on your computer to connect to the internet. And I remember watching my dad struggle with that stuff basically as like an early internet adopter. And in Bitcoin, we're 15 years in, and we're still in that phase. And it's understandable that we are. It's still pretty technical. Things are getting better and better. The apps, the services, the infrastructure is becoming better, and we're solving some of those problems that prevent mainstream adoption. And at what point does that take off? Don't know if it's external factors that add up to make the value proposition for Bitcoin suddenly clear to everybody. ETFs and the marketing that'll come from people like BlackRock saying that Bitcoin should be a part of your portfolio could definitely be a big part of that. But then it's the technology and the services that keep getting better and simpler. And there's going to be some sort of point where the majority of people can understand Bitcoin's value proposition and find it not as technically intimidating as it currently and historically has been. And that's going to be that hockey stick moment for Bitcoin adoption too.
Well, this leads into a good point. I mean, Mark, you mentioned earlier that people need to get curious first, and very interested to get your perspective on that and your work at 3IQ as you've been building out the research arm there. What are you seeing on your end? Are people getting more curious? Are they asking better questions? Jesse mentioned the BlackRock ETF. Has that been a catalyst for increased curiosity?
And I would say it is very hard. We've gone to what I call hand-to-hand combat, where we're traveling more and we're doing shows or presentations with financial advisors, companies, etc. And I do believe, I think pictures and stories help. I spoke to one advisor about, I said, I was amazed at the performance distribution of Bitcoin. I didn't realize how much it punched far to the right. It's not a normally distributed performance pattern over any kind of week, month, year, or quarter or year. And it's more logarithmic. And that is, for a period in time, Tesla had that type of distribution, but it then became a little bit more normal. And I said, that's why BlackRock's involved, because Bitcoin, and BlackRock thinks Bitcoin's going to survive. So that's what, Larry Fink got orange pilled by someone. And so now they're saying, well, it's going to survive. And so now let's monetize its performance because the bonds are not providing downside support. So they're looking at it as a remedy to the 60-40, among other reasons. And I bring that up because that was a huge utilitarian moment for me coming from the investment side. And when I relayed that to another RIA, they said, no one said this. I never realized that. So there's still a lot of nuggets. And the question is, always have a nugget around that someone can digest and then walk out from there. But just find out, what they like to eat, what their diet is. So that's been a bit more, again, hand to hand. It's hard to do in a publication. It's a little bit easier with these types of podcasts. So thanks for having me on. But face to face is still worthwhile because that's how unusual it is to get someone to invest. It really is a tough conversion. It's happening a little faster. We're getting inflows, but that's where I am.
As a solution to the problems of the 60-40 portfolio, that resonates with me as like that really is what people should be locking onto with Bitcoin. But what are the other types of, like, depending on what a person likes to eat, what narratives they're worried about or thinking about, what are the other anecdotes or facts or angles that resonate with the Wall Street crowd, wealth managers, various audiences you're speaking to?
Making it look like understanding technology stocks. So obviously we all know about the Magnificent Seven in the U.S. We have a Canadian audience, so they look at the TSX, and that's been, dead in the water, I think up 3.5-4% a year. So they're looking for remedies. And if you look at how tech stocks are valued, they have high price to books. We did a piece, we showed that the bank index is called it 1.2 or 0.9 price to book. It has assets, its price trades around it. JP Morgan's at a premium and other banks that are at a discount. And then you move up the curve to maybe like Visa, which is kind of like not a bank. It's like move up the curve of trying to dematerialize from the financial system. That has a higher price to book. And then you go to NVIDIA, and that's like a 40 price to book, because you can't use its book value to value it. Technology stocks are valued on how well management can convert intelligence and strategy using hardware and software. And it's a much faster and dynamic work industry. So also cash flow per share is very high for these companies. If you look at Bitcoin and you looked at cash flow per token, very high. If you looked at price to book, even if you roll in and say the Bitcoin mining network is 10 billion, you have a pretty high price to book. So that's how we kind of convert people to say, I know where you're sitting, I know what you look at. Let me show you how I view the Bitcoin protocol. It is a technology. It's odd because it's the internet of money, or it's a monetary internet. You couldn't own the internet. So let's say it's more like NVIDIA than it is like TCP/IP. So that's one way, Jesse, that we've done it as well.
Yeah, makes a lot of sense. It's sort of backwards from how I would have thought about it. Of like you want to focus on.
I've been told that before, Jesse, that I'm kind of backwards. So don't worry about it.
But it makes sense because it's just backwards. Like I guess I fall into the trap as not, I've never been a stocks person, but I fall into the trap of thinking, man, PE ratios are just way too high. But you're right that it's like kind of a different animal when you're talking about technology. And so a lot of that is warranted. And if it's warranted, it's great that Bitcoin happens to be something like that. So it's kind of a funny way of looking at it freshly.
Yeah. basically they're the wrong metrics. People are still using some metrics. We look at the Bohr model still, even though we're like, maybe that's not exactly how that stuff flows around, but it's a good starting point for us to walk into,
That's
atomic structure.
Yeah. That's the, is that the soup, the atomic soup one?
No, the Bohr model is the styrofoam ball with the toothpicks for the electrons flying around.
Oh, got it. Okay. Yeah. Yep.
Yeah. I think all the things you just explained are important, from just providing mental models for people to start to like anchor to something that doesn't, you can't touch or feel. But you hit a point. It's like business. It's always been relationship driven. You've always needed to meet individuals in space and meet space to shake hands and look eyes. I feel like, Mark, in my experience, and I think what you're alluding to, it's pronounced, or it's higher. Like there's higher conversion / just trust building when it comes to this asset class and meeting, because of there's just historically haven't been trustworthy individuals like you referenced earlier, but then also the fact that like you're tying some component, whether it's implicit or explicit, like to this asset versus it just going online, going to a Coinbase, clicking a button, and then you're hoping that it's still there when you look for it. It's like I'm looking at somebody in the face, I'm shaking hands, I'm understanding what's happening, and that there's a team, a business behind this, which makes sense that like it probably, and we think about our business and what you've been doing, it's probably gonna be a heavy part of this for the next couple of years, is anchoring to the real world, something that doesn't have any kind of like tangible feel in it.
Yep. And that's why, your model, when you are trying to say you don't have to do it, you can get, related parties to help. Yeah. Just like how you have a trust agreement, you meet with a lawyer and they hold it, your last will and testament, or your other documents. This is how we can do it here too. Someone calls it, not someone, a few folks have highlighted the term skeuomorphic, which if you're on Bloomberg or something, they ring a bell when you use fancy language or something. No jargon language there. But it means it's like when the automobiles in the beginning had a horse head on them, because they wanted people to be familiar. They're used to seeing horses on the streets, not cars. So they may not move out of the way because they don't know what it is. So I think that's kind of what we're doing here. Bitcoin doesn't need to be in an ETF, but there's behaviors that are going to be lagging the opportunity that have to be accommodated. And that's where we are.
Thanks for tuning in to The Last Trade. If you're enjoying the show and want to dive deeper, check us out at onrampbitcoin.com, where you'll find a full suite of institutional-grade research and analytics, including our recently published white paper, Bitcoin's Full Potential Valuation, and our new tool, the Onramp Terminal. Now, back to the show.
You mentioned bad actors in the space. Obviously, last year came with Terra Luna, Celsius, BlockFi, FTX, 3 Arrows. Go down the list. How much does a model like the multi-institution, multi-sig model that OnRamp's going after help people get over the fears of the bad actors in the space historically? This idea that you can distribute custody risk amongst multiple trusted institutions. Is that a good selling point?
Yeah, well, let us go back to what we wrote about last year when it was happening. And, I came into right at the week after the first rate cut and 2 months before Terra Luna. So our analysts and I were trying to sort through what was going on and see a pattern. And we finally came up with soon unregulated, centralized, bad actors with bad business models. There's an asset liability mismatch. And that last one was a biggie. Whether it be Terra Luna, with their model, whether it be 3 Arrows, certainly Machinsky. Forget the fraud. The business model wasn't really sound. The asset liability mismatches, taking down a lot of firms. So that is a big one. Is there leverage involved? Is there an asset liability mismatch? Those are the 2 biggest. And then is there transparency? There wasn't transparency into 3 Arrows. If you read those trustee reports on the emails between the prime brokers and Three Arrows. They're like, yeah, no problem. We got it. You sure? You guys have enough? You can make the margin call? Yeah, we'll do it. Never made. So I think having transparency onto it and then knowledge. Because here's a big one. And I'd like to actually take this across the side. I want to put a pin in it because I'm not sure I like that term. But I'd like to focus on this one. FTX's movement of $4+ billion out of the FTT deployer wallet in June to Alameda and then back to FTX in September was caught on Etherscan. I know we're talking about Bitcoin here, but that blockchain had transparency on it. No one looked at it. So I think part of it is the tools are there, but no one, it's too much too fast. So back to Onramp, if you guys can clarify it, provide the transparency, and you have that sound unlevered model, then I think, those are the boxes that I think differentiate what you're offering than what the other bad actors, how people were harmed in 2022.
Yeah, I think it's important to take it, like, to your point, the skeuomorphic. Don't know that term, but I'll go with your
Trust.
definition.
I know it, Mark. I'm with you.
I'll trust your definition in that sense of, like, how do you anchor back to what people know? And this idea of people know financial institutions, they know banks, but there's this natural aspect of Bitcoin that's different than other assets that you can split up that trust in movement. But to your point, Mark, it's like there has to be an education. And this is really where we kind of like joke around. It's like we're so early that, it's obviously like maybe we have, but I don't believe so. And I think a lot of people on this call would agree that we haven't really figured out custody. So we're so early that we haven't even figured out just like how to hold the asset long term. And this idea of, like, how do you actually get somebody to earnestly look at the asset? And I generally will go as far as to say it's like the education is almost secondary because people can't earnestly look at it, because historically, if you look at the long tail of firms that have existed in the space, they don't exist very long. So all people generally know is that if I buy it, I can only buy so much because there's a good chance that I won't get to have it or it won't be around. And it's not my own. It doesn't have to be they get hacked. It could just be like the third party that they're leveraging. And so I think by anchoring to, and it doesn't have to be like Onramp's model. It's more of this whole notion is really valid of like not your keys, not your coins, hardware or things offline, because at the end of the day, and this is something we used previously, is like the keys don't get up and walk away. So if you have a single hardware device, the reason why it's lasted and been a use case is because that hardware device, if you back it up and you put it somewhere, it doesn't get up and walk away. Now there's things that can happen. You want redundancy built in as the net value of as the asset appreciates as a percentage of your net worth. And that's where like multi-sig comes in. And then those keys don't also walk away because you distribute them. And there's obviously like trade-offs with that. And then you pick that up into this like multi-institution model where now there's different institutions that have those keys offline. They don't plug themselves in. They have like governance processes and controls in place. And that's historically what financial institutions had, and that they have processes. And now you distribute that where if one's a bad actor, you have this ability. So to your point, Mark, I think that like the skeuomorphic, like this idea of multiple institutions and the process starts to anchor back to the old world and has a check on all the things you just referenced with FTX. But also to your point, there's a lot of education that goes into play and like why it's a standard, why it's not like proprietary to a certain firm, why it's, it's native to the protocol and all of those things. But I think just like everything, you start somewhere and then you start to build up, and it ultimately with trust and reputation and other firms coming in and doing this, you start to build a standard in the industry. And that's partially where a lot of the folks on this call and Onramp believe is like we're establishing kind of a standard, and then others will follow. And it's generally like all things in technology. It's not like the Coinbases of the world. It's a tier 3 exchange. It's a tier 3 fund or some other kind of family office that starts. And then as others demand it, others start to look around and the game theory starts to dictate, or, like, hey, are you going to do this? Or why aren't you doing this? And then you see it establish as, it's the same thing with the banks right now and BlackRock getting into Bitcoin. It was starting to become too big to ignore.
Yep. Yep, and it will take time.
Yeah. And that's the question, is how much time? Like, how much do you think the macroeconomic tailwinds will force people to become more curious? Like, I guess pivoting this back to the macro backdrop, do you think it's chaotic enough to force the issue on people learning about Bitcoin quicker?
Not in the U.S. I think that, people in our industry talk about the global South. Argentina just let their peso go as not as promised, but part of plan by 54% yesterday.
Yeah, amazing.
And that's, it is on, our neighbors are on fire. So it is happening there. I think here it does have to be dressed up as a delectable delight that can maybe be passed on to your children and partially understood, but an amount that won't hurt you. If I had to put my salesman hat on, which I have one, we're a small firm and I do try to get people to buy it based on our research, is exactly that. It's an investment vehicle. It's full blown when it metamorphosizes when the metamorphosis happens and Bitcoin becomes what I think is a settlement layer and price, it transforms from being priced in fiat to being the unit of measure. That's not even worth talking about. People are already starting to text their phone on their phone by the time you bring up that topic. So I do think the investment thesis is a big one for getting people involved now. And the benefit of that for the longer plan, if you are a Bitcoin believer, that its real service is being fully distributed, you want to get as many people in now with 50 to 150 basis points of their portfolio. Don't have them even think about it being a unit of measure in 20, 10, 20, 30 years. Just have them be in it now.
Yeah.
Do you have a strong opinion on how these ETFs manifest themselves in the long tail risk associated, where if you have to get, sexy up your version, not yours, but in general, the market's version, that people may hear, leverage or yield and all the things associated, and we kind of get orders of magnitude larger kind of carnage, I guess, for lack of better words, that we saw in 22, but at the institutional level. Have you thought anything about that? Do you foresee?
You want to read your prospectus to see if the issuer or custodian can rehypothecate the coins. That's one. I don't believe that's in there. In the ones, I haven't read all 13 by any stretch, but I know ours are in cold storage, separate.
When I read the BlackRock one, there wasn't any language at all about that. And I sort of wondered if the lack of addressing that topic implies that they would potentially follow, ETF normal practices and consider rehypothecating.
I don't know. The biggest discussion now, and so Jesse, that's something to go back. Definitely for me to go back and look at. The part that is on the table now is whether or not the APs, the redemption creation folks, the broker dealers, whether they can do in kind or whether they have to do cash.
Right.
And I believe a purist, we'd like to see it be in kind in order to reduce the potential for spoofing or more paper Bitcoin, even temporarily for a day or two, being on the books. So that's the biggest piece. I think BlackRock's going back to try to get it to be in kind.
Yeah, that's right. They're one of two that's fighting for that, which sort of surprised me. Maybe Larry Fink really is more of a believer than I thought. I agree.
Well, while we're on this topic, obviously there's 13 ETF filings out there. It's assumed that most of them will get approved at some point, potentially in the next month or two. How do you see the competition amongst these ETFs playing out? You see Pareto distribution of who gets the most AUM versus others. How vicious is this competition for AUM going to be?
And Mark, maybe you want to tell everybody what you shared in the webinar of your knowledge and expectations about when and the likelihood of approval.
Okay. So the ARK Investment is the next firm up with ARK has a final deadline of January 10th, and the SEC has the ability to pass twice. If they pass a third time on a application, which ARK did a while ago, they have to give a new reason, and it'll be a final kill shot. We don't think that's going to happen because on August 29th, Judge, I think Naomi Rao, who's the Chief Justice in the Washington, D.C. Federal Second Circuit Court, said that the SEC's argument was arbitrary and capricious, a term she used 8 times. And their argument was that, yes, the SEC approved a futures based ETF for Bitcoin in 2021, I think. But that's very different because the CFTC oversees it. They understand, the 8 or the 9:30 to 4 o'clock trading. So they surveil it well. They understand the futures of that underlines the ETF. But this spot market, holy moly, no one knows what's going on there. You got Binance out, without even a headquarters, trading 70% of the market. There's no way we can know what's going on. And the judge in March, when the hearing happened, said that's an arbitrary and capricious approach, essentially, which she then used later. It's illogical because the future is based on the spot. How can you approve a future without a spot? And we belabor that point because for the listeners out there, think of that. A future is based on a spot, whether it's the E-minis in the S&P, based on the S&P index, or gold on the gold spot. They're based on the spot. If you don't trust the spot, why would you do a futures? It made no sense. So that's why in her 21-page opinion, her last word, she says what she felt and deemed their argument to be unlawful. Strongest words I've ever read in any court filing, and I was involved in distress for about 10, 12 years. So I think they heard her loud and clear, and that's why they didn't appeal on October 13th. And if you look at your Bitcoin charts, that's when Bitcoin started to take off. So they're going to approve it, or they're messing with censure and potential civil. I don't think they can do criminal, but civil liability from the court. So January, and that was a big, long segue because that's how strongly I feel it's going to happen. And it's going to happen. Sometimes people think the 8th to the 10th. So that's when we think the approval will happen. The part I don't know fully well, and maybe the other, Jesse, you other can, is whether or not BlackRock and others can roll it out that day. I don't think that's clear.
Yeah. The speculation I've seen from the Bloomberg ETF guys is their base case is that the SEC just kind of quietly stamps them all at the same time so that nobody has like a leg up or gets to claim a win,
Yeah.
Yeah. And I've heard like ranges of approval to launch anywhere from days to 45 days. For some reason, that 45-day figure has been out there. But I believe somebody was saying that the futures Bitcoin ETF, when that was approved, it launched 3 to 5 days after. Who knows if there will be some different outcome for this, but that's what I've heard.
And Mark, what do you expect from your previous colleagues and peers? Like, are they finally going to go streaking with you? Like, what's your phone going to be like? What's your phone going to be like that week when it finally does get approved?
I will get some pings. I think there will be some pings, and unfortunately, it'll be at 60 to 70,000. That's when you're going to get most of people buying, I believe.
Yeah, I mean, Marty's been through this a little longer than the rest of us, but invariably it ends up being like well north of a new all-time high. That's when my friends start taking interest. And so if that was to play out again, we're talking 100K before people even start being like, should I buy some now? Is now a good time? Which will be very frustrating to see again.
Yeah.
It It must be a nice world to be with the big boys. When you think about, you reference the October filing, but then BlackRock had announced in the summer. So like, it's very, very nice alignment. And then, 2 days ago with Google relaxing the the ad spend, which they had put in place in 2020.
Yep.
Like, oh, so nice, so convenient going into 20 as these, like, everybody goes, crazy on spend to market themselves. Like, just it's nice, beautiful dance into the big ball.
I don't think we're prepared for the marketing arms of these investment giants suddenly telling the world, telling every American with an investment portfolio at least, you should really have some Bitcoin. Like that's going to be a very different world to live in very soon.
And what do you mean by that, Jesse? That they won't be able to do it, or that the impact would be meaningful?
Yeah, that for for Bitcoin's entire life, all the media on it has been, dubious at best. It has been, this is a scam. This is internet drug money. It's used by criminals. And we've never lived in a world where BlackRock is saying, hey, this is a great product, you should buy some. And not just BlackRock, but these 13 other ETF providers. Really, like, as soon as those ETFs go live, all of Wall Street has an incentive to then funnel money to these new products and take a cut along the way. That's going to be kind of a light switch, I think, in terms of what people are exposed to with regard to how they're shaping their perspective about what Bitcoin is, and is it a good idea or a bad idea. So suddenly we're going to go from, like, it's just kind of this sketchy thing that nobody really talked about, and there's occasionally a very negative news piece, to investment marketing saying it's a good idea. That's going to be pretty night and day.
I agree. I mean, over the weekend, even people I talked to in the industry outside, they're like, oh yeah, wasn't that, they just talk about SBF. I mean,
Yep.
the guy was hugging Tom Brady's Super Bowl. Like, that's going to have a bit of a tail in people's minds, unfortunately. And I agree with you about the impact. Wall Street loves transactions. Bitcoin captures energy, Marty. You've lived it from the ground up. Whether it's capturing it from sustainable or other energy and transferring and minting a coin, it captures energy. Wall Street does that in trades. They take in money, they have an idea, they have a bid, they have an ask, they tell a story, and they capture a transaction in time and price, and they take a commission. So this is going to be big. They're going to say, what? I do something and it has 80 basis points on it, when the other ETFs are, anywhere from a nickel to 25 basis points. This is going to get attention.
Well,
Great point.
and that also leads me to question too, like, Wall Street is vaunted as the experts of the financial world and trading and how to allocate money appropriately in size and at the right time. Like, and we're talking about retail reaching out to us above an all-time high. That's the one thing I'm wondering, is, like, how many of these trading desks actually recognize the opportunity and will get the timing and sizing right at the beginning of this gun being shot to start the race with the ETF being approved.
What do you think, Jess?
I think they're noobs. I think they're Bitcoin noobs, and there's no way around it. I write about this sometimes, the hubris of having training in finance and business, and you think about money, you think about investing, and you think assets, and so you're going to bring that hubris to this, and we're going to get a whole wave of that, and Bitcoin will welcome these newbies in, and some of them will make a lot of money, and some of them will make a lot of the classic mistakes that we made in 2017. And the learning curve is going to begin for a lot of them at that point in time. And that's okay. Like, as we're talking about this, a thought popped in my head of, like, how's Marty feeling about the suits arriving here? And the reality of it here is what we're talking about is the suits are here to pump your bags and tell you that that the big boys are here now. But which will be annoying, but it will also be Bitcoin growing up and Bitcoin succeeding, and it comes with the territory. So like it's a whole mixed bag. It's going to be very annoying to have Wall Street telling everybody about, oh, we just discovered Bitcoin. But great. I'm glad that they're joining the party.
Yeah, well, on that, like this has come up from, I don't know, I think Larry talked about it, Larry Lepard on previous pod, but like because of we're talking about the reflexivity of the asset and then like it going no bid and how can people facilitate the trades. Do you have any like take on that, Mark, or like where you see that? Because again, that's the thing that is so foreign to the market is there's a world where they can't find or source enough liquidity. And that's, I think, that things like the question that's going to be hanging out there across desks, whether a crypto native desk or in the traditional finance space.
Yep. And that is a big deal. When we just talked about transactions. When you have an IPO, the issuer usually gives the book running manager a green shoe, the ability to pull down more to satisfy or to short and then cover lower. So there's a creation mechanism beyond what is transparent. As you said, you can't do that with Bitcoin. In fact, going back to the specifics, in that January 8th to 10th window where we expect the SEC to approve all 13, I think we're in agreement on that, or at least that's it. I agree with that, and I think Marty, you said as well. When that happens, two things are going to happen. Folks like Grayscale may be able to convert their existing trust. Fidelity has a Wise Origin trust. They'll likely offer that conversion to their clients who should probably take it. And there might be a few other trusts. So that'll be a conversion. That might allow for some selling. But any new orders have to be bought on that day. There's no pre-buying. I don't believe that they're pre-buying this. So will there be a gap in this? This absolutely there could be a gap. You don't have gold sitting, at the London Stock Exchange. They can, this is very different. So that's why that's why I did the piece with you, Jesse, last week, is we started looking at a valuation model because you have to talk price because it's going to move and it'll be volatile too, just like we saw last week with the, down 10, 15% move. This is very different, to answer your question, Michael. This is new to Wall Street. They don't understand it. They like to control processes, and they do not control supply on this.
Perfectly said. Yeah, I think that's a big question with these ETFs, and I think that it's something that people are generally assuming incorrectly about how this will play out. Where like on the day that ETFs are approved, does that mean there will be suddenly, BlackRock's been waiting to deploy 2% of their clients' assets into Bitcoin, and boom, you suddenly rocket up to 100,000 plus. I don't think so, because I think the mechanics you described, there's a moment in time where suddenly it's possible for people to start allocating into Bitcoin and for these ETFs to start purchasing Bitcoin to enable that. But it's, I don't think that there's like people sitting on the sideline just chomping at the bit waiting to get in who haven't already found a way to get exposure to Bitcoin. But what it does is it adds this ability for capital to start flowing in these new channels and continue flowing in. And so like that's one thing about the mechanics that I think people are like assuming incorrectly. It will suddenly skyrocket. We could totally have a gap up because if there is suddenly if there's some amount of excitement to buy on that day and a total shortage of interest in selling because suddenly there's an ETF, and so why would you sell? We could have a gap up, but I think that gap up is, and Mark, I think you're thinking this is it could be maybe it's 10,000, but it's probably not going to be like suddenly we're at 200,000.
No.
I think there's something worth like also it's anecdotal, but like we can make the case that the existing stock of Bitcoin being held is being held by the most sophisticated Bitcoin holder in basically the past 15 years. And what I mean by that is you had the run up in 17. Those were like, you know, a lot of OGs. People have their price points. The price sells, or people sell at the price. You go and we've oscillated, you know, back and forth from like 17, 18, hovered in this like range, but then going in late 2020, 2021, you had this new entrance into the market. But a lot of people were shaken out. And when I mean sophisticated, I mean like shaken out from positions that they held on all the quote unquote bad actors in the space. And I think Marty mentioned it, and there's like the data behind kind of the longest bear market. So you've kind of you've had this chance to not only shake out people unwillingly based on just they thought they held Bitcoin that doesn't exist and they're sitting in bankruptcy, you know, court, and everybody else was sitting in whether it's a better exchange or in cold storage. But then we've been in this long bear market for people to fortify positions, increase positions, where I think, again, making this case of like we've basically sat roughly 25,000, you know, give or take for 5 years. You ran to 20 and 17. We kind of ran up to 68, but we've like oscillated between on average in this area where this next leg up, there's a lot of people that aren't really they're positioned for a longer term hold. And obviously this is like anecdotal, but you can start to make that case of who's holding Bitcoin is not the same holder that existed in a net new entrant in 2020 and 2021, coupled with newer liquidity pools coming in. It's ripe for, you know, what we're talking about, this like gap up or explosive setup.
Yep.
Yeah. And that's look, and I put a chart that Unchained just posted earlier today just to quantify all of this. Bitcoin's up, what, more than 2.5x this year, and only 12.9% of the coins have moved in the last 3 months. And so what you're describing, Michael, is really playing out in these HODL waves. You see these peaks of the orange, usually when the price goes up. But if you look at what's happening right now, despite the fact that we're up well over 100% this year, it's not peaking. People are not moving.
Yeah, and go actually. Can you pull that back up? Where when that first time it hit 40K? Where's if you hover over? I'm trying to look at.
It's a tweet, so.
I know. I'm just trying to think. Is that 21? Probably like 21, right there. Like that peak, that last circle. That was roughly the last kind of 40K run up, and right. That's the HODL.
People are unfazed by unimpressed by 40K right now. And you know, I think this goes back to there's a very good case to be made that right now the spring is compressed for a variety of factors. And I think Michael's right that, you know, we've been in this zone for quite some time now. Really, 5 years that's fair. You know, that we've been in this sort of transitional phase for the last 5 years, maybe even you could call it the last two bull markets of this asset is no longer just a toy for crypto anarchists. And it's now like becoming digital gold, but it's not quite there yet. And then looking forward, there's a pretty distinct new era on the horizon of like, this is digital gold for the investment community, like starting in a month. You know, so we've been in this compressed spring zone for 5 years of it being in this like stepping stone to Bitcoin graduating to the next stage of its life, and you know, graduating into becoming a global store value asset. And we're right on the cusp of that moment happening. So, you know, I think I did some analysis earlier this year of like, what's the probability that this next bull market is bigger than the previous one? And you know, kind of impossible to say, but I pegged it ultimately at like 30 to 40% chance that this bull market, the next 2 years, is a bigger bull market than the one we saw in 2020, 2021, specifically because in that era we had the negative factors, the headwinds of the China mining ban, and then the pivot from QE to QT, at the end of 2021, which just kind of cut short the mania that I think would have happened under normal conditions. So we had those very unfortunately timed headwinds occur in 2021 that caused it to, I think, be a less explosive bull market than it otherwise would have been. And right now we're in the opposite conditions of we are in QT, and I think it's probable that they'll be pivoting back to QE if they sort of already have, liquidity is already up, into 2024, plus the ETFs, plus the sovereign debt crisis and global macro things going on with Argentina and elsewhere, and the case for Bitcoin is suddenly clearer. All those things are tailwinds that could mean that this next bull market ends up being more explosive for the first time ever, more explosive than the bull market before it. Not my base case, but the spring is compressed because we've been in this same price zone for so long, despite all this development that's happened. And the fact of the matter is that a month from now, we're in a totally new era for Bitcoin.
Yep.
Mm.
We haven't even really touched on the whole digital gold part, but it's about, I think, for the viewers or listeners, if you look at the amount of our economy that's gone online in the digital realm, no one's really looking to build warehouses to get people to get in the cars to visit them too often. Baseball game, a concert, etc. But with more of the economy going online, to have a monetary layer that settles every 10 minutes is a big deal. It's an odd concept, but just it's been talked about for 3 decades. And that's something that, you can ask Jesse or myself or anyone on here for information. We can give it to you. So yes, it is digital gold. We are in a coiled spring. We are priced along with equities and bonds in an environment that is QT ridden. So we're already priced in pretty bad things. We haven't priced in QE. We haven't priced in fully the ETF yet.
Yep.
And if you look at Bitcoin in particular versus stocks, as we said, it punches to the right. It has such a positive skew because of events and adoption, and it solves a problem. So your 30 to 30%, bigger bull market is a fair to conservative, in my opinion. There's just a lot of data that supports that.
Yeah, go ahead, Marty.
Chesney, I was going to say, it's funny you mentioned potential quantitative easing coming. Funnily enough, as we're recording this, Jerome Powell is going through his meeting, and one of the headlines out of there is most Fed officials expect rate cuts in 2024. Bitcoin's ripping.
Interesting.
Up almost 4% today.
So they have come out and said that now. So the narrative, they've rolled out the carpet in advance of that happening. That's what that says to me, right? Like, they don't want anything to ever be a surprise to the market, so they're priming the market for that eventually coming sometime soon now.
We heard it from Marty first, folks. You heard it from Marty. Seriously, that's a big difference.
Yeah. You'll all be hearing this on Friday. It'll be a couple days late, but we're the pros in this talk are hearing it now from Marty. Bitcoin approaching 43,000 again.
Marty, are they going to start calling you Marty the Fed Whisperer?
Hey, I'm not a Nick Tamaros. I'm not at his level yet, but if I keep my eyes on the tweet deck long enough, maybe I could be, But I know we got to wrap up here soon, but I did want to bring it back to the discussion about the immediate demand post ETF launch, and particularly focus on BlackRock, and could be completely out of bounds with this idea. But is there the potential, like once they launch the ETF, maybe they don't want to wait for demand for new customers to buy into the ETF? Could they put the ETF in a commodities basket? Because I'm looking at, Logan, you pull up the GSCI index that they have tracking commodities, and if you look at the historical performance, it's not doing great right now. And if they wanted to bolster the returns in their commodities portfolios, like Bitcoin has been deemed a commodity by the CFTC. Is that an avenue they could go through, or could they get exposure to Bitcoin in these commodity portfolios via their own ETF product? Something I'm completely ignorant to.
I'll give a shot at that. I know it's deemed an asset by the IRS. I think the SEC has stated, I don't know publicly, that it's a commodity. I do know that BlackRock has an unconstrained bond fund, and they could change the allocation there, or not bond fund, a multi-asset fund. So yes, they could have captive funds where they control the allocation. So that could happen.
Okay.
Yeah, my thinking there, Marty, is that they would probably surprise the existing holders of that fund, the commodities fund, who most of those investors probably don't think that Bitcoin is a valid commodity. And so they would be maybe pissed off to be like, why are you putting Bitcoin in my portfolio all of a sudden? So they may not want to surprise their clients with that. But I think Mark's right. They could. And if they really want to deliver performance, that's what they should do. So who knows?
Right, because even though I said a multi-asset fund, which has more latitude on asset types, they would have to assign an asset and say it's a commodity or a digital asset. And maybe that's not, in the original prospectus. So, yeah, I got some homework to do to figure out if an agency has deemed it to be a full commodity in writing. And I don't know if that's the case. Maybe that's why this ETF matters.
Yeah. No, I just had that harebrained thought while you were talking earlier, Jesse. It's like, maybe they don't have to wait for demand for their clients. They have a bunch of other funds that they could dump it into.
Yeah.
Before we dive off, I do want to say I'm very constructive on this year and this first quarter. And there's going to be volatility. Grayscale could see some redemptions. There could be a lag between the announcement when maybe it shoots up to, up 10K, like Jesse said, from today's levels. And it could go back down when it's not met. There's going to be volatility, no doubt. But we love the trajectory on the year.
Yeah, I kind of have this bad feeling, it's probably pattern recognition at this point of like people are a little too excited about the ETFs as like the savior that's going to send the Bitcoin price soaring. And historically, whenever those events happen or anything like this, it's very bullish in advance. It becomes a buy the rumor, sell the news event, where like very exciting, Bitcoin suddenly up a bunch, maybe it gaps up 1,000 or 5,000 or 10,000. And then it turns out there's actually not like sustained demand created by this ETF yet. Possibly, that's a possible scenario. And then the bottom falls out and we go back towards where we were. But the reality is that new channel is now live. And that demand keeps growing through those channels. And that has a cumulative impact over time. So, whatever happens, the volatility will be there, and it'll be driven in large part by speculators who are already in the market, I think, trying to position in advance of it, misjudging how much it changes demand day two, and probably underestimating how much it changes demand for Bitcoin, day 300.
I know Jesse's playing devil's advocate, but just to the opposite side of that is what we reference, like all the marketing push. It's like you can't give up, right? You can't like let up because of somebody else winning out the gate. So if that's the idea, then they're going to be relentless with it, so they don't end up in the back. And the one that we always forget about is Fidelity. Like Fidelity's been involved, but I think everybody pretends like they don't support Bitcoin. It's like, oh yeah, they're like, because Fidelity, they're so standard, trillions of dollars, Abby. It's like, oh yeah, they've just been playing around. And so now it's Fidelity and BlackRock in that full push. That would be like the counter to like, they're just going to go and they're not going to stop because they have to win out on like, they're the de facto or one or top 2, 3 asset managers that have the technology, and they don't let up.
No, I mean, we can tell you, Fidelity has the biggest team in the U.S., bar none. They have 200 people dead dedicated. And yeah, and you throw some high margin product out there, they're going to be getting it. And as I said, in Canada, we've seen inflows in November, some of the biggest post the FTX. So people are front running BlackRock in Canada. God bless the Northern.
And we should give a shout out Fidelity. Like we kind of talk a little bit, BlackRock and us not being, whether it's their interest in the space, their technology, their parties. Was chatting with some folks that are closer to Fidelity, and they've made a very concerted effort to transform their business to appreciate this asset class, invested in the technology. I think they're the only ETF provider that is leveraging their own infrastructure when it comes to multi-signature custody. And so they're in it for the long haul. So it's nice to see that there's an actual incumbent that's appreciating it from a vertical integration perspective and doing things the right way.
Yep. And to your point, there are people who've been there, and I think this is not new. Kathy Wood obviously has been owning Bitcoin personally for a long time. She's been a holder of, I won't talk about her holdings, but they're public, and they're in the digital asset space. So, don't get curious, folks. Give us a call.
I was going to ask, what are your final thoughts to wrap up this conversation? But I think it's a call to action. Get curious.
Just read our stuff. Jesse's report on the valuation is from salad to dessert. It's got it all, and just eat it. And we have some information on our website as well.
Mark, what's that report?
It, right?
What's the report that you guys have of answering all the questions that a wealth manager would have?
So we make that available to wealth managers, and it's called the Advisor Care Kit, because you're going to get a call about Bitcoin, and if you cannot answer these questions, you will not get the order, and they're going to sell stock in your account and buy Bitcoin away. So we actually saw that happen in the last run, where advisors, we know this because we lived it, as a reference for advisors to say, give me some information because I'm losing 5 to 10% of my assets. People are throwing on Coinbase.
That's exactly right. And we have this other thought that those assets that they moved over that sit outside, when the price, because it's 1%, they don't care. When it's 5 to 10%, they're like, hey, can you bring them back? We have a solution for it. So that's a whole other pool of capital that we haven't really touched on.
And back to what the question you asked, and it isn't on an unregulated exchange held in an omnibus account. You guys do it a little differently there at Onramp. Yep. So all the more reason.
Yeah, Mark, thanks for coming on. We'll get an email from you to any links that you want to include. And I'd be remiss to say we've talked about on this pod a report. It was Jesse. Maybe you want to plug the full potential valuation and what happened last week, because we've talked about it multiple times. We haven't announced where it is and how they can find it.
Yeah. So I put together, I turned my full potential valuation article into a full report that we put out through Onramp. And that's available on our website. If you go to onrampbitcoin.com/FPV full potential valuation, there's a link there to download the report, and you can take a look through that. The idea there is for it to be, a high quality piece of educational material that packs a lot in and is very accessible and readable. That makes a case for where Bitcoin is going. What is the full potential valuation for Bitcoin? How high could this thing go? And the hope there is that people can, use it as part of their own education. But I think it's particularly valuable to have in order to give to your friends and colleagues, to help them, wake up and see the potential of those assets. So go check that out, onrampbitcoin.com/FPV. And last week we did a webinar session walking folks through. We had 200 join for that, and we walked through the report and what it meant, and then had a great conversation with Mark, myself, and Brian from Onramp, where we talked through Bitcoin's full potential valuation, various approaches to valuing Bitcoin, and then had a great Q&A from the audience. And that was our first webinar. We're planning to do that on a regular basis going forward. So if you want to be aware of those events going forward, the best way to find out about them is to either follow us on Twitter at Onramp Bitcoin, or get on our email list and get our weekly market updates and news from Onramp about upcoming events, which you can find on our website.
Awesome. Pros, it's been a pleasure. Mark, thank you so much for joining us.
Thank you, Marty. Michael, Jesse, always a pleasure. Thanks, Jess.
Yeah, it was great, Mark.
All right. This is The Last Trade, but we'll be back next week with another episode of The Last Trade.